What's up, guys? Welcome to the multidimensional trading video series. This is video number 6 or part 6. So today what we're going to get into is the micro E-mini NASDAQ, and we're going to go over the bullish and bearish order block and how to use them in conjunction and confluence with the equal highs and equal lows, right? They're basically liquidity grabs, but using the bullish order block and using the bearish order block, the ICT concepts, you'll actually see where to look for that reversal after we tap liquidity, right? What does it run into, right? Because you can see the liquidity grab, but you also have this extra confluence, which is the bullish order block at the bottom or the bearish order block at the top to go short, right? So let's get into it. Here at the beginning right here, we have this bullish order. We have this bullish order, this bullish block of orders going straight up, right? And that created a high. That created the initial high, right? That we're going to run in a little while. Okay, so this bullish order block was put in here on this 1 minute chart on the micro E-mini NASDAQ. Okay, there goes our first low. Now, what are we waiting for? Lows to be equal. We're waiting for equal lows to get made. Lows equal. Equal lows made as the price came back down. You can also take your trades from here as well, right? Once you got equal lows, you have a good chance of the price going up or appreciating quickly, going up pretty fast. So equal lows, nice bounces, equal lows, nice bounces. It really held this level for quite a while. You can see it really held this level. And then the only thing below these are sell stops. So once it runs, it's got to run into something. It ran down, stopped right at the bullish order block. That's where reversal was at. We broke the lows, basically liquidity grab. Where did it stop at? Right at the bullish order block, where the orders got bullish before price ran all the way up. Okay, that's where we enter our trade, at the bullish order block. Come here, right into the bullish order block, and then look at that run. Nice run up. Beautiful run up. Okay, I took the trade on the pullback, which is when it pulled back to these highs, the level that it just broke. Took the trade on the pullback and took it up. Okay, very nice. And then we also had the double bottom right here at the bullish order block, and then the continuation. Okay, so that's the bullish order block scenario that just happened today, this morning. And then we have the bearish order block scenario right here, right? We have the highs. Remember, it does bounce and short at equal highs. Remember, even if those highs that you short don't last, you have a nice dump to run down into. And of course, if you did short at these highs, you would probably get out where you start to see some type of support, which was right here off of these tops. And these tops obviously supported the price to go higher, right? So you wouldn't just sit there and hold, you got to stay objective. So you see an object, if price runs into an object, it's probably time to get out and wait and see how that reacts at that object. Don't just hold it and hope that you caught the top when it's running into objects. Okay. Now what did price do from there? Bounced, went above these equal highs, because what's at these equal highs? Buy stops, right? Went right into the bearish order block. And that's when it reversed. That's exactly where it reversed. Okay. And then it got super bearish, and we dumped all the way down to 21,369. Okay. Got extremely bearish. The day is bearish. The 4 hour was down already. The 4 hours already red. So this flush out was going to happen eventually, because the larger time frame was to the downside. The dailies to the downside, the larger time frame on the 4-hour was to the downside, right? So we had this larger 4-hour to kind of flush out here. Okay, so the point is this. Almost all the time, it's gonna have a flush. It's gonna have a liquidity draw. It's gonna have a liquidity grab, and it's got to stop somewhere. Okay, it usually goes below the lows. Remember, it stops usually at an order block, and then reverse and closes above the lows that it just broken. Right, price goes below them, close above where the lows that it just broken. Because if you look at the lows, if I put it right here at the lows that it just recently broke, price came up and then closed above them, and then as you can see, we went up. Okay, that's why I had the confidence to take this retest and go up. And then it retested the order block area, the lows at the order block, and then continued up. Okay, and then it broke up here. We have that break and retest off this level, and then a continuation right into the order block, and then sayonara, apparently. That was it. So I reiterate this because I want everyone to get used to seeing that the mechanics of this market happens over and over. You can use the same concepts on any asset on multiple time frames, right? The reason why I'm looking at the 1 minute, because this is the Nasdaq. It's very volatile. You don't need really to play any other time frame if you're just day trading. You can look at the larger time frames to know which way the market should be trending, right? But a lot of different things are going to happen within those time frames. Like the 4-hour was bearish with pretty much this whole time, right? Because the 4-hour started at 8 o'clock. This is 8 o'clock all the way till 10:30. Like, we're still within this 4-hour candle. This is inside of the 4-hour candle. Right? We're playing with inside of the bearish 4-hour candle. But there's so many different things that we could do, right? We had the lows to bounce off of. We had the order block to grab, right? We had the equal lows we could, the equal highs we could have shorted. We had the bearish order block to short, right? There's so many different things. We had the pump and the pullback. We had the pump and the pullback. There's so many different trades to take within that 4-hour candle, even if it was bearish. That's why we go down to the smaller time frames and just take what we can get, not be greedy, and enjoy the run. But we use these very simple concepts to understand what the market is doing. And if we can stay objective and continue to look at just the objects on the chart, we have a really good chance of making profit each time we touch the trading chart, right? Each time we take a look at it, each time we put our time and effort and energy to it, we have a really good chance of being profitable and staying profitable if we just follow the roadmap, right? We just stick to the plan, right? We run into a bearish order block, we look for signs of getting bearish, we take it, okay? We break above a high, we look for signs of support, break and retest, we take it, right? I rather take mine from the lows off of the bullish order block. That's what I prefer, because I know it's a safe trade to take after it's ready to run, and then it breaks a level, comes back and retests the level. I'll draw the line out so you guys can see exactly what I mean. So we broke above the level and came right back and retested those highs, and then off we go, right? Because if you look at that, that's 485 to 509, right? It's a little bit over 20 points, right? Very nice trade on something that you can see clearly, right? We had this break above the level and retest, same thing, right? See those supports off of this level, 510 up there to 545. That's a 35-point move up until the bearish order block. Okay, and of course we would sell here. We can see this bearish order block. Of course we would take profit here. If not, take profit reverse. If not, just go short and wait to go short. Right? See how it reacts, because it could just blew right past this, right? That's possible, but it didn't. It got bearish at the bearish order block, so it's time to take that short. Now, did we suspect the 4 hour to run down that hard? Probably not. If anything, I would have been looking for to take profit back into this order block right here, right? That's where I probably would have been getting out at. But the 4 hour was bearish for sure, so it had more room to flush. The larger time frame does supersede the smaller time frames. This is pretty much all I wanted to explain in this video for part 6, for lesson number 6, because it's simple. It doesn't take a lot of time. Remember, rewatch the videos, you guys. Paper trade, like the video, subscribe, because there will be more coming. We have 4 more out of the video series, out of the 10-part video series. So yeah, subscribe so you can get those notifications and see the videos when they come out, so we can all further our education, get better together. So yeah, that's pretty much. I just want to reiterate what I'm seeing and what we do on a daily basis, or what we see on a daily basis, and these techniques can be applied to multiple assets and on multiple time frames, right? You can trade these on multiple dimensions. Remember, this is multi-dimensional trading. This is what we aim to do. Okay, so whether the setup was on the 1 minute or the 1 hour or the 3 minute or the 30 minute or the daily, it's still going to behave the same way. You're still going to be looking for the same behaviors. Still going to be looking for the bearish and bullish order blocks, whether this was the 30 minute or the 1 minute or the 5 minute. You're still looking for these same setups, right? On multiple assets. Now remember, I'm looking at it on the 1 minute time frame because this is a NASDAQ. It's very volatile, so you would make funds rather quickly if you trade the NASDAQ. If you trade Bitcoin or something like that, you might have to up the leverage if you want it to be quick and fast gains, but I prefer to use less leverage on something like crypto. Okay, so that's just my preference. But other than that, guys, this has been the conclusion of video number 6, part 6. Like, subscribe. I will see you guys in the next video, lesson number 7, part 7, coming soon. And yeah, that's what I got for today, guys. Peace.